Financial markets in turmoil.
What are the root causes of the financial crisis?
The dollar losing value.
Heading for its biggest loss in nearly 3 decades.
Will Social Security even be there?
I don't know.
Buy or rent?
That's a very good question.
Interest rates.
I'm not so sure.
Where do you put your money?
I don't know.
Welcome to the show that answers your questions. This is Follow the Money Weekly with your host, economist, and best-selling author. Here's Jerry Robinson.
Friends, welcome to you all around the world. Welcome to Follow the Money Radio. So grateful to have you here along for the ride again this week. Well, today our topic is going to be cryptocurrency investing. Cryptocurrency investing, particularly in 2021, we have had a really interesting run in the price of cryptocurrencies. Just think about Bitcoin. We've seen this tremendous price increase. Go back to maybe March or April of 2020, and you'll find that Bitcoin was hanging out around $5,000. You know, we did a podcast on October 7th. That was actually the last cryptocurrency podcast that we did here on Follow the Money, and it was called the bull case for Bitcoin. The bull case for Bitcoin. And there we laid out, the reasons why we own cryptocurrencies, specifically Bitcoin, and why we were bullish. And at the time, Bitcoin was trading at about $10,000. Since that time, we've seen an enormous price increase from $10,000 when we did that podcast in October, laying out the bull case for Bitcoin. Now it's gone up to, $60,000, trading somewhere just below $60,000. That is a massive run since October, considering this is only March of 2021 as we do this podcast. And that really kind of brings me to the point of why we're doing this podcast today, 6 months later, after Bitcoin has gone from $10,000 up to nearly $60,000, is to say that this is something that we were actually teaching here at Follow the Money to our members, was the fact that 2021 was going to be very likely a special year for cryptocurrency prices, particularly Bitcoin, but also things like Ethereum and Ripple and other types of some of the major crypto assets that are out there. And the reason is, and if you go back and you'll listen, in fact, we'll put a link in today's show notes back to the bull case for Bitcoin, that podcast. But I really laid out in that podcast, went back and listened to it just a few days ago, and I said, wow, this was we really laid it all out for you to help you understand why we thought Bitcoin would go up. And much of it has to do with cycles. We do a lot of cycle work. And what I mean by that is that we look at charts and we look at past cycles and how asset prices have evolved over time. And one of the very interesting things about Bitcoin in particular is the fact that it moves according to I'm very hesitant to say a predictable cycle, because I don't really believe that there are too many real predictable cycles. But we could say that it moves according to maybe a somewhat foreseeable cycle, or maybe an anticipated cycle or probable cycle, in the fact that over time, Bitcoin tends to have these really big, massive rallies. And we had one back in 2013, the lead up to the 2013 price spike, that was about an 8,000% rally. And it burst in the beginning of 2014. And then 2014, there was this, massive collapse in the price of Bitcoin. And the price fell, by the time it hit the low, fell about 80%. And then you move forward and fast forward to 2017. And those of you who remember cryptocurrencies then, remember the big bull market that happened in 2017, where Bitcoin reached around $18,000 at its peak. And that was, of course, in 2017, 4 years later after 2013. And then 2018 really kind of saw the bust, the price bust. So Bitcoin went up, everybody was excited. And then as we entered into January of 2018, that cycle came to an end and the bust was big. And how big was the rally in 2017? Well, when you go back and you look at the lows after the 2013 peak, and then you look at the lows and then look at the next 2017 peak, you'll see that it was around 8,000%. And then after it reached that 18,000 price high back in 2017, late 2017, early 2018, then it came crashing down again. And when you finally measure, how far did it go down from its peak, it fell around 80%, right? So in other words, what we see with Bitcoin is at least the last two major cycles, with 2013 and 2017 being our examples that we have seen. And these are also attached to the Bitcoin halving, right? These happen months after the Bitcoin halving, the peaks. It's all very interesting. And we've done a lot of work to show our members how this works. We have videos and whatnot for our members. We provide ongoing cryptocurrency education and things like that here at Follow the Money. But whenever you look at the chart, you'll see that 8,000% rally leading up to the 2013 peak, and then an 80% collapse that follows. And then everybody declares Bitcoin is dead, right? Everybody says, oh, Bitcoin's dead. We told you, it's all a big joke. And then we have another 8,000% rally that, concludes toward the end of 2017, at the beginning of 2018. And then it's followed by another massive 80% collapse. And of course, Bitcoin is declared dead and everybody says, see, we told you, it's not real. And then we are now living through yet another one. And we had told our members that, look, 2013, 2017, both of these were years where we had these blow-off rallies that resulted in a big, massive 80% collapse, right, of the price. Well, just using basic math and looking at the cycles, we would say that 2021 would be the year where we would probably see the next big, massive rally and then blow off top, right? And then, of course, we would expect another seismic correction, or not even a correction, a collapse, right? 80% is not a correction, it's a collapse. And so while I'm not making a massive prediction here, I'm not saying that we expect, Bitcoin to utterly collapse at the end of 2021 as it did at the end of 2017 and as it did at the end of 2013. I do believe that we're going to see another big sell-off, and it could be up to 80%. Right? That's what I'm saying. We could really expect to see another really big price wipeout in Bitcoin when it crashes, because everything goes up and everything goes down. And if you know cryptocurrencies, they're boom bust assets, right? Very similar to commodities in that fact. And so on today's podcast, what I want to do is I want to reiterate some of my core investing principles regarding crypto assets, but in light of the fact that we are now fully entrenched in this bull market cycle that looks a lot like 2013, that looks a lot like 2017, and that is very likely going to end with some sort of blow-off peak and then a big major collapse that will kind of bring us into another crypto winter where prices consolidate, projects have to kind of make do with less interest for a period of time, and then you'll see this move again. So we expect to see many of these cycles in this very early phase of cryptocurrencies. And let me tell you, if you're still not invested in any way, shape, or form in cryptocurrencies, and you say, well, I'm too late, I would suggest to you that you're not too late. But I want to tell you this up front, that when it comes to cryptocurrencies, so many people take a all or nothing approach. And that's not what we teach here at Follow the Money. I've been telling our members since 2013 that the way we're approaching cryptocurrencies is to invest a nickel out of every dollar that we can invest, we would invest in cryptocurrencies. Now, that's not too much, is it? That's not a big deal, is it? That's pretty small. So what we do is we take 5 cents out of every investable dollar that we can invest. We can invest it where? We can invest in real estate. We could invest in our own business. We could invest in the stock market. We could invest, in gold or silver. I mean, there's so many different places we could invest, right? So out of that dollar that we can invest, not rent money, not, money to pay the bills. I'm talking about money that you can invest, investable money. Well, we take a nickel out of every dollar that can be invested, and we put it where? We put it into cryptocurrencies. Which cryptocurrencies? Well, you can see, if you remember, you can go into our website, followthemoney.com/cryptocurrency-portfolio. And there you'll find all of the cryptocurrencies that we own for the long term. And we provide ongoing insights, we provide ongoing education, and all of that for crypto investors. And we've been in the space since 2013. So we're not some Johnny come lately. We're not just arriving here suddenly and thinking, that we're going to get rich off of cryptocurrencies. We've been here for a long time, and we've been educating people on good principles for a long time, and we've invested in solid projects for a good long time. So again, we're not here to hype or pump any thing about cryptocurrencies. We are viewing it as a highly speculative area, and we have treated it as such by only putting 5 cents out of every investable dollar into cryptocurrencies. We have been currently, in this current environment, we have been dollar cost averaging into our favorite projects, and Bitcoin is one of them. We have 4 cryptocurrencies that we really, really like for the long term, but we own several more, right? Because who knows which projects will actually take off in the future. There's ones that you can look at and say, I really like these projects, but then there's others that they may take off, you're not sure, and so having a little bit exposed to those is probably a wise idea. So we have about 15 different cryptocurrencies that we have exposure to. And when we are in times like this, where we see the price just accelerating and prices going up, and we're way off the ground, we're at new all-time highs. Well, in this kind of environment, we're not backing up the truck to buy Bitcoin at $60,000, right? We were backing up the truck a long time ago whenever it was cheap, whenever it was very, very relatively cheap. So at current levels, we are still buying Bitcoin, but we're only dollar cost averaging that nickel, into our favorite projects at this current time. So I think that's a eye-opening way to look at cryptocurrency. I can't tell you how many members we have had who have come to follow the money. They become a member, they become a gold member, platinum member, and they unlock access to what's behind the paywall. And they're blown away. They're like, they had no clue that we had all of this education on cryptocurrencies, on our portfolio, all the video education that they receive. And so many people, when they become members here, they say, wow, this is incredible, all the knowledge I'm able to receive. And they also see the wisdom of how we approach cryptocurrencies. Classic example is we had one brand new member, is named Thomas, and he had emailed me just the other day. In fact, I got another email from another member I was going to share with you, really interesting. But Thomas, he had emailed, and he said, I had never thought about just, putting a small amount into cryptocurrencies for my portfolio, just kind of like you would with some other speculative asset. He said, I just had never thought about it that way. I just kind of viewed it as all or nothing. And that's the way many people view investing, right? They say, well, stocks are a good idea, so they put all their money into stocks, right? Or they say, oh, I think gold and silver are a great idea, so they put all their money into gold and silver, right? Or they say, oh, I think real estate's a great idea, so they put all. The key or the concept here of diversification so often is lacking because we don't have a lot of financial education, right? It's just not there. You don't learn it in school, you don't learn it at college, so you're really just kind of on your own. And that's what we're here to do, is to educate people on how to be a better investor, how to be a better trader. And one of the greatest takeaways that many people have is simply realizing that they can break up their investable assets and invest a nickel of each dollar into, say, Bitcoin. So Thomas was just basically saying that's a breakthrough in his thinking, that he had never thought about it that way. And he wished that he had started putting a nickel into Bitcoin way back in the day. And he said, I used to laugh at all of this stuff. He said, if I had not come to follow the money, I would still be laughing at this. Instead of making money, I would be laughing at it. And so I thought that was so interesting. And I wanted to share that with you today, is that, that's a core investing principle that we have when it comes to cryptocurrencies. Right now it's 5%. It's been that way since 2013. We may increase it in the future as they become more adopted, but for now, 5% is a plenty of risk. So don't cry for me, Argentina, right? If suddenly Bitcoin goes to, let's say every cryptocurrency just goes to zero tomorrow, well, what's that going to do to me personally? Well, don't cry for me, because I've only put a nickel of every dollar into cryptocurrencies. So if they go away, well, that's kind of bites, right? But I've only got a nickel in. But fortunately for me, that nickel has got a massive return upon it because of what's happened in the cryptocurrency space, right? So don't view everything as a, all or nothing kind of approach, right? You can have a little bit of crypto, you can have a little bit of gold, you can have a little bit of silver, you can have a little bit of stocks, you can have a little bit of real estate, you can put a little bit of money in your own business, right? There's so many different areas to diversify your finances. And cryptocurrencies with 5 cents of every dollar, to me, just makes sense, right? It may not make sense to you, but it makes sense to me. And it has definitely made sense to many of our members. Many of them have enjoyed incredible gains with Bitcoin, and not just Bitcoin, but many of the other cryptocurrency projects, that we like a lot. So I have a few more things to say about cryptocurrencies. I'll say those on the other side of this break. Also, Jerome Powell, the Federal Reserve Chairman, just made a statement comparing Bitcoin as a substitute for gold. We'll play an audio clip of that and comment on that on the other side of this break. Hold tight. Hey friends, Jerry Robinson here from Follow the Money Radio. Are you a new cryptocurrency investor or considering becoming a cryptocurrency investor? One of the very best cryptocurrencies in my mind for the long term is, of course, Bitcoin. And we have been investing in Bitcoin personally here at Follow the Money since 2013. It has been quite a ride, and we have learned so much over the years owning this asset. And we have just released a brand new video called Bitcoin 101. For those of you who are looking to understand what Bitcoin is, how it works, why it is so attractive to investors, and what the future could hold for this unique asset, this is a must-have video. It's on special right now for a very discounted price, only $7, to give you access to a full hour of education from me, someone who has actually been invested in Bitcoin for more than 8 years. So you're going to learn a tremendous amount in this 1 hour video. I encourage you to check it out. It's now available in our online store. Simply go to followthemoney.com/shop. And there you will find this brand new Bitcoin 101 video, an hour long, jam-packed with education that you need. Not only do we talk about what Bitcoin is and why it's so attractive to investors, we also talk about our own approach to cryptocurrency investing and how we approach Bitcoin in particular. So you'll really learn a lot. If you know someone who wants to learn more about Bitcoin, if that's you or someone else you know, check out followthemoney.com/shop and get instant access to our brand new Bitcoin 101 video. I know it'll be a great eye-opener for you if you're looking to invest in cryptocurrencies. So go to followthemoney.com/shop and get your Bitcoin 101 video today. All right, welcome back to the program, friends. You're listening to Follow the Money Radio. You can find us online at followthemoney.com. My name is Jerry Robinson. I'm an economist and investor and founder here at Follow the Money. And we're continuing our conversation about cryptocurrency investing in 2021. Now, there was something that happened earlier this week when the Federal Reserve Chairman, Jerome Powell, said during a virtual panel discussion on digital banking hosted by the Bank of International Settlements, the BIS. And here's a clip of what Mr. Powell had to say. It raised a few eyebrows. Roll the tape.
Crypto assets, they're highly volatile, see Bitcoin, and therefore not really useful as a store of value, and they're not backed by anything. They're more of an asset for speculation. So they're also not particularly in use as a means of payment. It's more a speculative asset that's essentially a substitute for gold rather than for the dollar.
So there's Mr. Jerome Powell, the head of the Federal Reserve, talking about Bitcoin, which is a, 12-year-old asset, perhaps 12, 13-year-old asset. And he's comparing it and saying that it is like gold. Now, remember, gold is a, 2, 3, 4, 5,000 year asset, has long been used as money, has long been viewed as insurance against calamity. And that's exactly how we view gold here at Follow the Money. We own gold, physical gold, as insurance against, out of control fiscal and monetary policy like we see today. So gold is, of course, viewed as that asset that provides a hedge And here we have the Federal Reserve, one of the most important institutions in the financial world, and especially here in the United States, literally declaring this asset that is 12 or 13 years old as a substitute. Listen to the word, a substitute for gold. You have to really let that soak in and really think what's being said here. This is being said by the Federal Reserve. And what's interesting is that Mr. Powell also quickly tries to get the conversation off of the dollar. You see, there's a concern that cryptocurrencies like Bitcoin could actually challenge the supremacy of the reserve currency, that is the United States dollar, the world reserve currency. And that, of course, is more of a concern. And so Mr. Powell is certainly eager to make Bitcoin a substitute for gold and not for the dollar, because that would be problematic. In fact, this is actually kind of old news, because Mr. Powell has already mentioned this substitute-like nature of Bitcoin for gold. And he did this a couple of years ago when he was sitting before the Senate. I think it was the Senate Banking Committee. And during that time, he made a very similar statement. Let me roll you the tape. We've actually played this before on one of our previous podcasts. So this is not, again, something new that Powell had said. He is actually reiterating something that he has already said, perhaps, though, giving it a bit more clarity in this most recent statement. But let's roll the tape from the last time we listened to this similar speech. Powell said something like this. It was back in 2019 before the Senate. And you're going to hear a senator asking the question, and then you'll hear Mr. Powell provide his answer. Let's roll the tape.
If a cryptocurrency system were to become prevalent throughout the globe, would that diminish or remove the need for a reserve currency in the traditional sense?
I think things like that are possible, but we really haven't seen them. We haven't seen widespread adoption. I mean, Bitcoin is a good example. Really, almost no one uses Bitcoin for payments. They use it more as an alternative to gold, really. It's a store of value. It's a speculative store of value, like gold. So we don't have, and people, of course, have been talking about this since cryptocurrencies emerged. But we haven't seen it. But that's not to say we won't see it. And if we do see it, yes, you could see a return to an era in the United States where we had many different currencies, and in the so-called, I guess, national banking era.
So there's Mr. Powell, commenting, and again, comparing Bitcoin to a hedge like gold, and not so much as a reserve currency. And the fact of the matter is that he's correct. I mean, not everyone is using Bitcoin to buy things. In fact, it's really a form of digital gold. As Charles Hoskinson, who's the head of the Cardano project, has kind of compared cryptocurrencies, your first generation cryptocurrencies are like Bitcoin. That is the concept that you can actually have a method or a means of exchange, value exchange, without the need for a trusted third party to intermediate. And that's really what the first generation cryptocurrency did. First generation, things like Bitcoin. And then you have the second generation, things like Ethereum, where you not only have the value exchange available, you have a digital currency that's tradable, but you also have another layer that's built atop of that cryptocurrency that provides, it's like a data layer. And there you can actually have smart contracts. You can have other things that are programmed into that money. So it's like programmable money, smart money, if you will. And so where we're going, it's very difficult to really know. Who knows where this thing will actually lead? But what we do see already is that the Federal Reserve is providing great legitimacy to things like Bitcoin by literally equating it as a substitute for something like gold, which is an asset that has been around for, again, thousands and thousands of years. So it really shows you where we are and how people's thinking is beginning to change and evolve the more that we are exposed to the blockchain technology. The reason that I bought Bitcoin in the very beginning, and the reason why I continue to dollar cost average into Bitcoin and other similar projects, is because of a simple word, and that word is called finite. You see, we live in a world today where hardly anything is finite. Like, for example, the U.S. dollar can just be printed at will. The Federal Reserve is just printing money. It's just, for a long time, it was just straight up buying corporate bonds with printed money. We don't really have a max supply or a cap on the number of US dollars that can be created. So we continue to see a debauchery of our currency. Last year in 2020, the value of the dollar went down 6%. Meanwhile, Bitcoin was up well more than 100%, maybe even more. I forget the exact number now. I mean, it was up a staggering amount. But again, you had, the US dollar down 6% during that time. So if you're just sitting in dollars, you're losing value. You're losing the value of your dollar just by holding it. This is really the kind of moral hazard that we've entered into now, where people are piling into the market expecting the Fed to continue to bail it out because they have nowhere else to go. So I like the fact that Bitcoin has 21 million total max supply. At the end of 2140, I think it's like 2140, all of the Bitcoin that will ever be created will have been mined by that time. And there'll only be 21 million. Right now, there's about 18.5 million or something like that. And so it's going to take a long time to get to that final, number of 21 million. But the point is that it's finite, right? And that matters, right? That matters in a world where you can just print everything out of thin air, right? Stocks can be issued. You can issue more stocks. They can dilute the value of your shares of stock. We live in a world where hard assets matter and finite matters, right? And that's what Bitcoin provides. And that's why you see so many institutions turning on and understanding. Elon Musk, and many of these other CEOs who are saying, we want exposure to Bitcoin because it provides some sort of protection against the out of control spending. And that's why Jerome Powell is correct in pointing out that it's a substitute like gold in the fact that it protects against that. Now, it's a much more unstable store of value than, say, gold, right? Because the price moves up and it moves down. So the store of value aspect will remain to be seen. But so far, it seems to be that Bitcoin is winning and the dollar is losing, right? We've seen that. And even gold, to a certain extent, has taken it on the chin because there is another area where you can put your money to provide some sort of protection. Now, I'm still invested in gold because it's been around for a long time, and for me, it's insurance. I'm not looking to get rich with gold, right? Gold is not a get rich quick asset, or even silver for that matter. I own gold and silver, but I don't own them to get rich. I own them to protect my other paper assets that I hold, right? So to me, it's really just insurance. Now, Bitcoin and cryptocurrencies are a whole different world. They may provide clearly some sort of inflation protection, but they are obviously much more speculative, and their prices today, tomorrow, the next day, it's difficult to know, right? So our 2025 price target, we've already issued this. In fact, we issued it on our last big Bitcoin podcast, the bull case for Bitcoin. But our 2025 price target for Bitcoin is $275,000. Now, when we issued that price forecast back in last year, when Bitcoin was trading at around $10,000, that sounded pretty crazy. Well, we've seen the price already accelerate. Who thought we were going to hit $60,000 6 months later? And we did. So we've seen a big price spike, but we believe that by the time we hit 2025, now that's 3.5 years from now. By the time we hit that 2025 timeframe, we will have seen or will see a $275,000 price target reached. That's our belief, and that's based upon not opinion. That's just literally based upon the math using the previous cycles. So we expect it to be a pretty wild ride for Bitcoin, but we don't expect it to be straight up, right? Again, we're expecting, another big wipeout. It could come at the end of 2021, just as it did at the end of 2017, just as it did at the end of 2013, that 4-year cycle. It may or may not. One of the differences that is between 2021 and the other previous rally years is the fact that we have now a lot more institutional support. Now, we don't have a Bitcoin ETF here in the United States yet. They already have one in Canada. They have another one, I believe, in Europe. I forget where the other Bitcoin ETF is, and there's more coming online. But we don't have a actual Bitcoin ETF, an official Bitcoin ETF here in the United States yet. But we will. And so you can tell how early we really are in this cycle, right? We're so early in the understanding of cryptocurrency and the understanding of blockchain. We don't even have an ETF for Bitcoin yet, an official Bitcoin approved by the SEC here in the United States. But But we do have institutional demand. We do have a futures market for Bitcoin. We do have a lot of institutions who are turning on to the idea of the finite nature of Bitcoin, and they're adding it to their balance sheet. So what will that mean for the next 80% potential price collapse? Will we see institutional support prevent that contraction from being as severe as we've seen in the past? Will the institutional support prevent the crash from being a full 80% as it has been the last 2 times? We don't know, right? We have no idea, no way to know, but we're monitoring it and we're watching it. So, we could go on and talk much more about Bitcoin, about how, I personally buy it, all of our rules, but we talk about all of that in our new Bitcoin 101 video. Again, you can pick that up for $7 right now. It's a steal. I mean, this will give you a great education on Bitcoin for a very small amount, and it'll really help you understand how we have been viewing Bitcoin, how we view it from someone who's been invested in the space for, around 8 years. So again, not some Johnny come lately, not any kind of pie in the sky kind of ideas here. We are really just looking at the math, looking at the technology, looking at the cycles, looking at the science, and providing an interesting 101 for those who are interested in the space. So if you're interested in that brand new video we've done on Bitcoin 101, all about Bitcoin, a full hour to help you really get your mind around it and help you understand whether it's right for you or not, just simply go to followthemoney.com/shop. And you'll see the Bitcoin 101 video there for $7 right now. It's a steal. So I would encourage you to go check that out. Bitcoin 101 now in our store. All right, so that we've covered a whole lot today. I'm probably going to bring this now to a close. But before I do, I want to read you a new email we received from one of our new members here named Mosen is his name. And he wrote in to us earlier this week. He said, "Hi, Jerry. I want to start off by thanking you. If it wasn't for you, I would have given up in trading and never would have considered going back into the stock market again. My journey started in January, where I was introduced to the market by friends. And long story short, they had no real method or discipline. And I ended up losing a lot of money." And he puts a lot in all caps. He said, "I had no idea too, and I just followed them with what they were saying. Fast forward to the end of January, where I listened to a podcast you were on, and I decided to sign up with Follow the Money. I spent a lot of February watching your courses, reading and learning while trading, and instantly started doing a lot better and was able to finish February on 150 pounds and recovered my loss. It's March now, and before this, I was happy making 50 pounds a week, and I'm assuming that from trading, and I guess I'd still be content with that. However, I have had days where I have made 200 pounds, and I am consistently making gains. Honestly, Jerry, I can't thank you enough, and I'm excited to see what the future holds. Gratefully yours, Mo." Mo, thank you. I wanted to read this on the air because it encouraged me, and I know it will encourage those who hear it, Mo. And you had mentioned you're happy for us to share your email here on the air with your first name. So thank you, Mo, for that very kind email. We receive emails like that so often, but I don't share them on the podcast too often. But I thought this one really met the mark, because he had mentioned, Mo had said how he was introduced to the market by friends. And they had no method or they had no discipline. So he ended up losing a lot of money. That's what's happening right now. Many of our members are coming to Follow the Money saying, I was following social media gurus. I didn't know where to go. What books am I supposed to read? There's so many people trying to learn right now. And we have the education here. We have years and years and years of education. We have lots of videos, archives, videos, courses, everything you need to really become a better investor, a better trader. All the education is here at followthemoney.com. So I encourage you to check that out. And thank you, Mo, for taking time to reach out to us and let us know what Follow the Money has meant to you. It means a great deal to us to hear from you. All right, friends, with all that said, let's bring this now to a close. And as always, I like to leave you with a final word. This time, I just want to mention a quote that is unknown. I think whoever said this is just anonymous, but the quote just goes something like this: "In seeking happiness for others, you will find it in yourself." And that's such a true, powerful statement. Over the years, and I even apply it here with what we've done here at Follow the Money, is that we have really promoted the idea of education and helping people succeed. And when we help other people succeed, that is good for us. It does good things for us. When you help others, when you focus upon other people and try to provide solutions and help for them, then you too will find good things. And I really just want to say that to you, that It's not all about self-pursuit. It's not all about pursuing what we want, but helping others get what they want is a secret in life that is so powerful, and I believe that it is really something to think about. Remember, friends, when you want the truth about the global economy, just follow the money. Have a safe and prosperous week, and we'll see you right back here next time. Until then, God bless.
The information contained on the Follow the Money podcast is strictly for informational and educational purposes. It should not be construed as specific investment advice. The views and opinions of our guests and sponsors, including Tom Cloud, are their own and do not necessarily represent the views of FTMDaily.com or Robinson Media Group, LLC. Jerry Robinson does hold an insurance license and at times may offer consulting on life insurance and fixed retirement income products. Follow-up, individualized responses to email or phone requests that involve the rendering of personalized investment advice for compensation will not be made absent compliance with state investment advisor registration requirements or an applicable exemption or exclusion and applicable insurance regulations. Past performance is not indicative of future results. You should be aware of the real risk of loss in following any strategy or investment discussed on the podcast. Remember, never do your financial planning through podcast or radio. It's your money. Be wise. Do your due diligence and always consult a trusted